Crypto markets fall alongside risk assets as correlations are back on the rise. ETH Merge optimism fades somewhat with lower option volumes as vol spreads look stretched. Hedging flows return as spot breaks down in Bitcoin, opening up a test of recent lows. All this and more in this week's Crypto Insight. Okay, so crypto this week, technically not looking great. Obviously, we've been fairly bearish in general, more medium term for Bitcoin. We don't think the bottom's in yet. And this kind of break lower out of this ascending channel is kind of confirming that the next down leg may be on, right? Obviously, risk assets had a bad end of August after Jackson Hole. On a relative basis, Bitcoin's been struggling to perform. All the attention's obviously been on Ethereum and the merge, and Bitcoin's likely been the funding leg and the macro hedge that people have been using to be able to allow themselves to be long Ethereum and participate in that story while still being relatively crypto neutral, right? Now, stocks obviously broke down, especially tech. Bitcoin took out the bottom of the recent ascending channel. That opens up now. I'd say the next big support area really here is sort of 19K to 18K. If that goes, then we could have our next leg down. Personally, I don't really see the sell-off ending until sort of sometime in Q4. And for me, just a soft sort of target is something like 10 to 12K. That would be consistent with where I see stocks maybe potentially falling to. The only sort of thing to say is maybe crypto's already quite bombed out and every man and their dog is short Bitcoin against other stuff. Maybe it doesn't need to go that low, right? So that I am sympathetic to that idea. It might not need to go that low, but if it wanted to go to 10 to 12K, I wouldn't be that surprised because, I do think the tightening liquidity environment is not great for the space. Yeah. But when we get our pivot, this shit's going to go screaming higher, right? That's what I think. Yeah. And then if we look at sort of the Ethereum side of things, obviously Ethereum is pulled back quite significantly from its recent highs, right? It's pulled back a good 20-odd%, 23% from its highs. And so whilst investors are still optimistic about the merge, the correlation with stocks has been rising back to like 60-odd%. Yeah. So Ethereum, just like Bitcoin, can't really escape the whole what's going on in stocks. And if stocks are going to roll over violently like they did on Friday, then the whole space is going to take a hit on that. Yeah. Now the sort of the whole story around the merge narrative and why everyone's so bullish. Obviously, we've kind of talked about this before. Let me share this screen. Right. Let me make it a bit bigger. So the idea with the whole ETH, why everyone's so excited about ETH, is this kind of triple halving thing, right? Where you're just taking so much supply out of ETH that it's like 3 Bitcoin halvings all rolled up into one. Okay. And people are talking about the inflation rate of Ethereum since they implemented EIP 1559, where they started burning the fees. That took the inflation rate to about 4%, right? And post merge with everyone staking and all that minor supply not hitting the street anymore and being sold, that's going to take about $8 billion per year of ETH supply out of the market. So that's what they're basically talking about. But anyway, the idea is that it goes from an inflation rate of 4-ish% to maybe -1.5%, right? That's kind of the story, the narrative around this thing. Okay, so that's the bullish argument, and that's why people obviously can see a re-rating in ETH, and they can see it as a bit of an overnight step change, right? Like when the merge happens, once it actually happens, it's like, okay, this has happened. There's no longer the supply, and we can re-rate 500 points higher, whatever the hell it is, right? I don't know what that number will be, but that's the idea. In terms of other things to be aware of, already mentioned like crypto correlation's been rising to stocks again. So despite you had a bit of decorrelation when everyone was getting excited on the merge, but now it's kind of trading more in line as some of that spec money is being taken out. The proof of work token, where that's been coming down in price. So that was in the kind of $60-70 range. It's down to about $50 now. I don't know really if that means a lot, other than maybe people's confidence in the value of that proof of work token is going down, suggesting that less chance of the fork and any problems with the merge, basically, right? I guess that's incrementally probably positive for merge sentiment, right? And then the last thing here, we've got the chart where you've got Bitcoin and ETH options versus futures volumes, right? And you had a massive explosion in options volumes, and that's actually come back down to be more in line with the kind of increase that we've seen in futures volumes in Ethereum. And a lot of that options speculation was all those call flies and call spreads that were trading in monster size. That's calmed down a bit, basically, right? That's the idea. People have kind of got their stuff on to the upside. The vol spreads have gone astronomical. They don't look good value anymore to own calls to play that. So people have stopped doing it, basically, right? So the idea is people now, if I want to own ETH now, I'm just going to do it through futures because the options are too damn expensive, right? And that's certainly what we're seeing in terms of the volumes and the way things are moving there. Yeah. Then if we then move over to kind of the volatility side of things, realized volatility in crypto hasn't really spiked, right? Despite the breakdown in spot, you can see here that 10-day realized since kind of middle of August, kind of there, if not a bit lower, right? Around sort of 45. And Ethereum's kind of been hanging in around that sort of 70, 80 area, hasn't really budged much. So realized kind of unchanged. And implied's not doing a lot. You still got positive vol carry. So you've got about 20 vol points of carry in Bitcoin, which is pretty juicy. So if you've been short gamma on Bitcoin, you've been happy. Yeah. Even though implieds are now starting to look relatively good value in that kind of 60 area, it's realizing 45, right? So there's a reason why implieds are down there. That's why I think owning Vega and less gamma is probably a better trade, because the mean reversion element of owning vol in the 60s in Bitcoin is going to work in your favor if you own December, March, or even June 23 vols, because they don't bleed so badly in terms of theta. And at some point, Bitcoin vol is going to pop to 85 again, probably, and you'll be able to bang it out, right? So that's where you want to be parking your long vol in Bitcoin, not in the front end, which just isn't realizing. Yeah. And then you can see Ethereum also has positive vol carry, but not as much, despite being on a much higher vol, because Ethereum is just winging around a lot more. There's obviously rebalancing flows going on with regards to the merge and people getting out of positions. Apparently Jump, a market maker called Jump, got out of all of their ETH exposure. That's what QCP were talking about last week. So that maybe led to some of the weakness and some of that realized volatility there. Yeah. If we then have a look at what term structure is doing, you can see that Bitcoin shifting lower, pretty parallel move, a little bit more in the front, quite a steep contango now, but that's just in line. Realized dragging down the whole curve, basically. I had said that, whilst I think longer dated vol in Bitcoin is good value at these levels, I think it's going to get dragged lower. So I'm kind of sitting on my hands and waiting for it to get really cheap before buying it. That's kind of, that's kind of what's happened, right? Vols come lower. You look at Ethereum, it's not really shifting down by as much because it's moving a bit better. But you look at the one point on the curve that won't budge is September volatility in Ethereum, right? Because that's where you've got the merge bucket and that's where it's all basically concentrated. So you're seeing both sides of the curve kind of bending down, but that September holding. When the merge happens, that's all going to get crushed, right? There's going to be a major vol reset. I mean, you look at the ETH versus Bitcoin vol spread, you can see that in September, it's like above 35 vols. And that's the event bucket, whereas both wings of that are bending, right? So you can see that the gravity is starting to take hold and try and pull down this vol spread towards where it's ultimately going to go, which my guess is 10 to 15 vols, where currently it's at 30 to 35 vols, right? So it's got a good 15, 20 points downside, this spread. And we're starting to see that in the buckets that aren't exactly the event bucket, but, post middle of Sep, when this news comes out, that whole curve is going to reprice dramatically lower. And that's a trade that I'm starting to get very interested in playing and starting to scale into to benefit from that repricing, because it's like one of the most obvious repricing that's going to happen. You just got to manage your risk to be able to play it, make money off it, and not do your conkers if the thing has a big move, basically, right? And given what's going on, like now that we've pulled back from the highs in Ethereum, and there's less froth in where Ethereum is priced, then I'm getting a bit more confident maybe about leaning long Ethereum into the merge with a short vol position, and then maybe using some Bitcoin to protect it. But I'll talk about that in a bit more detail in a minute. Crypto skews. ETH skew going a bit ballistic. It's kind of, I was wrong. I was clearly wrong on that call, thinking that call skew was going to catch a bid as we approach the event. It's quite the opposite. Put skews caught the bid. So it shows you that rather than buying expensive calls that are going to reset lower, people have bought call flies, call spreads, call ratios to play the move up, and they're buying delta and they're buying puts to protect that, basically, right? So that seems to be the way people are structuring to play this event, which basically says to me that people who are buying Ethereum into this event are well hedged, which means it doesn't need to crash. If they're well hedged, it probably doesn't need to have a 30% sell-off, right? So people who are thinking it's going to crash on a sell the event type thing, I'm starting to think that's probably not that likely, okay? But right now, 1 to 2 month put skew in ETH is about 3 or 4 vols more expensive than Bitcoin. Bitcoin's around 7 or 8 vols for puts. Ethereum's around 11 vols for puts. Okay. Yeah, like I said, I got proven wrong on that, but thankfully it hasn't really done me any damage, so that's all right. And then this trade here, like I said, the vol spread between Ethereum and Bitcoin is the clear trade. It's the standout trade right now. Okay, I'm calling it the trade of the year. Okay, in crypto, right? I'm calling it the vol sale of the year. Okay, so you can see here, I wouldn't sell the 1 week crap. That's pure gamma. The thing could do a 300-point move and you're going to do your ass on that. Wouldn't do that. But when you look at 3 months out, the 3 month out is about as high as it has been. Okay. I mean, this is only looking at a 6 month history, but we can go even further back. I mean, it does not belong at 30 vols, right? So the 3 month, which is kind of like your December bucket, is trading 30 vols over Bitcoin. That's going straight back to 15, if not lower. Okay. So there's easily a 15 vol point reset in the December Ethereum. Question is, how do you play it, right? So the way I'm playing it, and I'm scaling into this position, is I'm selling October and December strangles, okay? I'm selling more puts than I'm selling calls. So I'm going to have a net long delta position, basically, but I'm going to be short vol and long delta on Ethereum via being short October and December volatility, okay? Which I think is going to reset lower by 15 to 20 vol points post the merge, okay? And what I'm doing against that is I'm buying Bitcoin October puts because I'm leaning long delta anyway via Ethereum. So I need to be short delta on the other side of that to protect myself somehow. Now, the volatility on October Bitcoin is decent value on a 60 handle now. Okay. So you can own like 30 delta puts on Bitcoin to give yourself, and you buy enough of those to basically spend some of the money that you think you're going to make in the reset of the volatility in Ethereum. You spend like a third of it or something like that, let's say, on Bitcoin puts in terms of premium. And the truth is, you could get the reset in Ethereum. You could get the spot knee-jerk higher. Bitcoin can do very little, and you might not even lose any money on your hedge, basically, right? Whereas if everything rolls over, Ethereum's probably going to get hit harder in terms of spot than Bitcoin, but the vol reset's going to play in your favor, and you're going to need to own, you're going to own more delta, more short delta on Bitcoin because you've got that October put, which you made sure had a bit of delta on it. And that's going to have some gamma to the downside as well, which is going to grow. So the idea is that's going to protect some of your losses, might not protect all of your losses, but it's going to do a reasonable job at protecting your losses to the downside. And then you're going to have quite a decent bit of upside if Ethereum does decide to re-rate higher by 20% and vol gets annihilated, basically, right? So that's kind of the trade. That's the setup. But for me, that's a trade you need to be thinking about if you've got the appetite to sell vol, which I obviously have. Be sensitive about your sizing, but it's probably the best crypto vol trade I've seen this year, right? It's probably the most clear one, I reckon. Yeah. And then lastly, let's have a look at crypto flows. What did we see last week? Hedging flows dominating Bitcoin, obviously. either through short dated put spread buying. So we saw a big clip of like the 2nd of September. So this week expiry 19K, 18K put spreads. That was bought in about 1,800 lots. We also saw some long-term Vega buying. As I said, this June 23 bucket now being bought as a Vega trade. So delta hedged upside calls, and they're delta hedging it, and they basically own what looks like pretty damn cheap vol out to June 23 in Bitcoin. So from a mean reversion perspective, that's probably going to come good at some point. And then on Ethereum, the flows are a bit more mixed, right? You had put spread buyer as well, protecting the downside using September 1,700 put spreads in a reasonable clip. You had an October strangle buyer, 800, 3,000 strikes. So again, that looks kind of like a bit of a protective trade. You had after Powell's speech and the market started rolling over, you had a bunch of near the money short dated calls being dumped. And that's kind of this region here. And then on the upside, you are seeing March 23 call flies and calls being bought. That's similar flows to what we've seen, but just not that big this time around. And then you had a September 3,000, 5,000 call ratio, which was a buyer as well. Just kind of obviously, taking advantage of that elevated vol to try and get some upside exposure to ETH without spending too much premium, right? Okay, that's kind of it for me on crypto. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.